Hello and welcome to Tracking Technicals with me, Nikunj Dalmia. Like I always say that we always believe that there is always opportunity in the market, be it a bull market, a flat market or a bear market. Well, the markets are not off to a great rara start for 2023. But brokerages are of the view that this could be a decent year for individual stocks. If patience and luck made all the difference in 2023, it really could be skill and risk management, which in a sense will really be the differentiating factor for 2024. How do you embrace the volatility and how exactly you manage your risk in your portfolio? 2023 was all about patience. Buy and hold, don't sell. And if you bought stocks in the first week of Jan 2023, you did nothing till 31st of December 2024. Doesn't matter what you bought, you made reasonable money. Will that thesis continue? We'll talk about it. But before that, let's bring our viewers up to speed with the market headlines. There is a bit of global numbness and which is having impact on the Wall Street. Nifty maintains its range-bound trade above 21,500. Broader market, they continue to outperform handsomely. In metal and IT stocks, largely global in nature, thank you to Nasdaq, I guess they are underperforming. While media, PSU banks, they are holding on. Now, what are we discussing today? Well, we are discussing the consensus targets. Now that brokerages have come out with their bullish and the bearish outlook, what exactly is the stack looking like? What is on the brokerage radar? What is the prediction for 2024? And the most bullish target we have is from the house of Jefferies. And Jefferies feels that from the current levels of Nifty, which is 21,000 plus, Nifty could go up to 24,000. That's a jump of nearly 10% plus is what Jefferies is betting on. Similarly, UBS, on the other hand, feels that it really could be a down year for Nifty, which means from the current level, Nifty may not do anything special, it may just remain range bound, but the absolute returns are unlikely to come through. Now, they say that you never buy the consensus, but sometimes consensus cannot be overruled. What is the consensus this year? Buy banks. We know that, don't we? Buy banks. The best and the easiest trade for 2024 is that banks have been in this long sleepy hibernation. They will come back. The second one is industrials and utilities. Utilities means power, industrials means capex. Again, a theme which was a dominant theme for 24. And then IT services. I don't agree with that. I don't think IT services are buy yet because valuations are above the historical average, but brokerages are saying that that is. The sell is coming on metals. Not surprised, China has not come back. America is on the brink of a recession. World may have escaped a recession in 23, but will they do that in 24? That's the theme. Now let's look at some consensus buy and be specific here. Top 4 stocks which are coming as the consensus buy across brokerages. Number 1, ICICI Bank. Number 2, Axis Bank. Number 3, RIL. And number 4, L&T. I'll hit a pause here. Why? Because where is HDFC Bank? I think HDFC Bank was supposed to be the consensus. I can see Kunal Bothra nodding his head also. Maybe he's in agreement with me. I'll talk to him why. But where is HDFC Bank in this entire consensus, buy? The outliers, and this is very, very interesting, guys. Very, very interesting. Each one has a different view. Nomura, Citi has a buy on Indus Towers. It's like an outlier. Nomura, Minda, Auto Ancillary. Morgan Stanley Avenue Supermart, DMart, RKD. They've done nothing in terms of in stock, right? Have they? Still trading at 50, 60 times, 2 years forward. But are they getting the growth back? Because the stores they're adding now, 40 stores approximately last year, that's a large headcount and a large aggression which a conservative management like DMart is doing. Markets think in terms of quarters. Promoters, they think in terms of years. Radhakishan Damani thinks in terms of decades. And he's trying to build a franchise which is built to last. So I would not rule out what Morgan Stanley's logic here is. Interesting one on Eicher Motors from Jefferies. The premium bikes are here to stay. It doesn't matter what's happening in the EV space. You still like the cult culture of the 350 and 350 plus RE platform. And then HSBC is the real outlier. They have a buy on Nykaa. So that's the way how things are stacked up. Kunal Bothra is getting ready. And let's say hello to him. It's a very interesting consensus we are discussing. I have my pen also. You ordered one more extra. I don't have to borrow from you now. Producer has been kind enough to do it.
Effects of bull market.
Good television actually.
Yeah, actually.
Okay. Consensus buy and sell for Nifty, please. Let's look at it. We are discussing the consensus. Jeffries most bullish 24,000. UBS, when I say bearish, they are talking about a flat year. Most of the brokerages last year also had a flat prediction for 2024 for the Nifty. Let's see that graphic will come up. There you go. So Kunal, Jeffries 24,000, UBS 20,000. Who will get it right?
I think Jeffries should get it right.
Why do you say that?
So I'm very bullish on the index. So for a change for the first time, I think in the last so many years, we've got all parts of the wheel moving, all sectors moving, and the bigger chunk or the bigger wheel, like the large caps, have still not participated in the same manner. This is the charts of the Nifty 50, which we discussed some time back also. And we've seen historically that whenever the indicator which have plotted, it's a strong trending indicator which tells you cycles which come by into indices which last for years, not for a few weeks and few days. And when these cycles, they get into a breakout mode, we see years of rally for the indices, something in 2013, 2017, 2020, post-COVID. And right now we are at a point where the index has given such a kind of a strong indication. So what we are looking out for is a potential 20% to 25% upside, at least over a very short period of time. If you do that math, it lands up to 24,000 plus.
Okay, so you are of the view that Nifty, and we'll sketch it up on a blank page, and after that we'll go to the consensus individual stocks also. You are of the view that the bull case scenario, I think we'll do it for me. This has not changed, right?
Yep.
The bull case for Nifty, what is your number?
So it's 25,000.
Bull case.
Bull case scenario.
Bear case?
Which means that the worst downside I would expect not beyond 20,000. Not below 20,000.
So you expect 20,000 to act as a support.
Correct.
Which means every time the markets are behaving like a 2-3 day decline, just go and buy the Nifty.
Yes.
Have we got the decline enough?
No, not yet. I think right now we just see the 300-point decline, 300-point
At
decline.
what level you will buy?
So I think if we land maybe closer to 21,000, which means another 500 points from current levels. Yep.
Okay. That's the Nifty strategy for the month of Jan. We'll revisit it when we have
Correct.
to revisit it. Okay. Now let's look at the consensus large cap stocks. The consensus large cap stocks, and when I looked at that number, Kunal, for me what actually held out, I think we'll have to just wait for the graphic to load up here. What actually stood out for me, that within that consensus, HDFC Bank was missing.
Exactly.
It had ICICI Bank, it had an unusual name Axis Bank, it had Reliance in it, it had L&T in it, but at a time when this is again 5-6 brokerages put together, are you a bit surprised that HDFC Bank is not a consensus buy for 2020?
I'm very surprised, and that's why I was nodding, because why? Yeah. I mean, HDFC Bank has been one of the prominent, so the highest weighted stock in your index has to play a key component whenever you are expecting the index to get into a breakout or into a new trend. Rarely have we seen large cap stocks not participate. You look at 2005, 2003, 2008 bull market, 2009 to 14 and so on and so forth. Large caps have played a prominent role, whether it's at the start or at the end of the bull market. That could be debated. But not having large cap names like HDFC Bank is definitely a surprise.
Which would be the strongest according to you for the year? If these are the 4 consensus stocks, which could be the strongest one?
Out of these 4, I think Reliance could be the strongest one.
Reliance could be the strongest one. If you have to really look at a large cap stock.
Large cap.
Could Reliance be the stock of the year from Nifty?
From large cap, yes. I think Reliance and HDFC Bank, I'll probably play it safe.
They could be stock of the year from the Nifty.
Yes.
Okay. Let's now look at some outliers, and these are very individual specific names here. I'll give it a shot. Some of them, I track, some Kunal tracks, some we both don't track. So we'll skip the ones we both don't track. We'll talk about the ones which Kunal tracks and which I track. Okay, now, which are the ones you track?
So I track Industar, Avenue Supermarts, Aisha Motors. Yep.
Let's look at Avenue Supermart, the 3-year chart of Avenue Supermart, please. We love to talk about it. Owned by Radhakishan Damani, the famous investor. It was in news. Radhakishan Damani's name was in news. Keeps on popping up, but yesterday it was on news because he increased his stake in VST. Now that's Avenue Supermart, where the 3-year chart of Avenue Supermart will just come up. From 3 years approximately, it's got a limited history. 2016-17, I think it went public.
Correct.
From 3 years is what we are looking at, Kunal. It is not like an ugly looking graphic, right? It is still decent. So is this good enough consolidation for the stock? Is it getting ready for a leap forward?
I strongly believe so, Nikunj. In fact, at these levels, I was actually looking at the longer term charts, of course, with a limited history. This was a point where the indicators were hugely overbought, and we've been discussing how overbought conditions pan out in stocks. So there's bound to be two criteria which you look out for. One is a price correction, which has to happen into stock prices, because to cool off those prices, overbought natures, you have to have a sharp correction. And it's not the vertical fall which is important, it's the time spent at lower levels. So a time-wise consolidation. Luckily for DMart, we've seen 2 years of time-wise and price-wise consolidation.
And valuations have come down because business is growing.
Exactly.
They've added 40 stores, Kunal, last year. And this is the conservative management of DMart who follows the philosophy that, look, I'm going to go in one area, increase my market share in that area. I will not do anything what other retailers have done locally and globally. I will go easy on my e-commerce. I will not burn. So a man who's conservative by nature, both in investment style and also business style, is looking at expanding.
Exactly.
Added 40 stores, which means he can see what we can't see.
Exactly.
So pedigree and valuation. I always say that Nairman point महंगा रहता है. So DMart is that Nairman point stock.
It'll always charge.
It'll always be at a
charge
premium, even though the business is not like we really high margin business.
Correct.
Second one, you track iShares.
Yes.
Let's look at again a similar 3-hour chart for iShares, and this one is like a stock which I take a lot of pride in saying that, look, I understood the trend. Indians are, it is not an ordinary mode of transport. It's this rough biking experience. It's this brute force of power which iShares gives you. And even though Harley has come, Hero has tried to do something with Harley. Bajaj is trying to get with Triumph. Mahindra tried with Java. None of these companies have managed to dent even into the top tier market share.
Correct.
I mean, the market share of iShares, I think, was 90. It is still 75-80%. Has the stock again consolidated enough in last 3 years?
Yes, it looks like, because it was one of the late movers from the two-wheeler pack, one of the recent breakouts when we look at the charts, and a more formidable one in terms of a breakout. And then you look at the comparative price levels. Bajaj Auto at 6,500, 600 plus mark is a bit overstretched when I look at it relatively. Hero MotoCorp at 3,500 to 4,000 range. Again, it's a slight overbought level. But when I look at Eicher Motors as a chart comparatively, I think it's a classic risk reward to go long.
DMart or iShares? Or both?
So different spaces altogether. Difficult to pick one, but I would probably pick both.
Okay. Third, you track indices.
Industar.
Okay. I don't track it. I'll wait for the graph to load because I don't actively track that much the way I track DMart and iShares. I'll reserve my views on it. But it's been a dodo stock, right? It has given a lot of false starts. Every time I think, okay, this time it's different. It gives you the 10% spike, comes down. Gives you that spike.
It's only the erratic behavior of the stock. That's why it's more of a trader's favorite rather than investor's favorite.
Could it make money in the month of Jan?
Again, I would probably look at it this more of a trading bet. So, because I believe that the stock has to show signs of change of behavior. Change of behavior leads to change of trend. As of now, we've not seen that happening for industry.
Okay, let's go to the blank page and we'll summarize the 3 stocks which we've discussed. And I always like to assign the word probability. And when Kunal is there, we always like to play the rule of probability. We've learned that, right? The probability of getting a jack of, probability getting an ace in a pack of 52, 4 by 52. Okay, so let's look at the probability. I will DMart, Indus Tower and iShares. P is for probability. What is the percentage that this will give a positive return in 1 year?
For DMart and Eicher Motors, I think it's more than 85 to 90%.
85%. And for Indus?
Indus, I'll probably make it 50-50 because it's more of a trading stock as of now.
So then go for these two.
Exactly.
Okay, that's interesting. Kunal feels that the probability of DMart giving a 85% positive return in next 1 year, iShares 85 and Indus could be 50%. Thank you, Kunal. Thank you very much. Let's take a break. Before that, here are some more views on stock ideas and themes and trends for 2024.
Couple of the leader banks not giving any kind of a return creates the perfect base for to start thinking of placing bets in terms of from 3 to 5 years perspective. So I am again, without naming anyone, the cycle in financials remains in favor. Large lending, the private banks remains favorable. The capex cycle is just beginning, the private capex cycle. The corporate lending growth will pick up going forward.
I think the second area which we've been talking about is, as I said, if you can put it all in the bucket of manufacturing or cap goods, infra. I mean that whole pack, power, real estate, renewable energy. I think you find companies, quality companies there, and I think you could compound at 20, 25, 30% a year for the next couple of years, right?
EMS as a space, whether it is +1 or not, is going to boom anyway because the electronic component in our daily lives is significantly going up. Now, having said that, these stocks have rallied a lot. So it is not as if they have not rallied. Their earnings will also grow, may not be structural, may not be like every quarter it grows. So you will see surprises here. Those are the opportunities to buy.
Now time for our query segment. Bhasin Saab joins us and let's take it forward. And first, I just want to thank our viewers for their queries. Please keep them going. We'll try and accommodate as many queries as we can. Fundamentally, technically, we'll try and answer them so that you can take the right decision. Choice is yours. Me and Sanjiv would really like to guide you with what our understanding is based on market cycles and based on our understanding of markets. We could be right or wrong. Judgment is yours. We are simply trying to give a perspective here. That's a decent disclosure to have, Bhasin Saab. Ultimately, the investor has to take a call. We could be right in hindsight. We could be wrong. Time will only decide. We are simply trying to pour in an experience and perhaps give the best advice. That's really the honest submission.
Yes, Nikunj, you summed it up perfectly. We are giving you an honest and a clear opinion on what experience and what fundamentals are. Rest, a little bit of luck, but timing, if you keep those, if you keep the moment, the underlying asset with you, then definitely over a period of time, you should make money.
First question, sir. DN Saxena, 10,000 shares of L&T Finance at 127 rupees. What is the right time to exit? Is it possible that we could see levels of 200 plus soon? Bhasin Saab.
Well, congratulations. You've caught on to the stock at the right time. It has underperformed for the last 3 years on the back of the fiasco which happened with ILFS and so on. And it underwent a sea change. But I think now the management is very, very optimistic. They've cleansed their books and they are focusing on the right side of where they are financing. Their liability franchise is doing well. And as you know, co-lending is a very, very key perspective which is going forward. I don't rule out 200 rupees coming, but try and take a technical check and keep a stop loss at maybe 160 for at least 50% of your profit. But congratulations to you. If you have the wherewithal, I definitely think in the next 2 months, 200 rupees can come on this. But keep a stop loss of on your stop profit of 160 on at least 50% of your portfolio.
Bhasin Saab, it's not looking all that hunky-dory for NBFCs, especially for NBFCs which are borrowing short and lending long. I'll break it for our viewers that you're borrowing short from the bond market or the debt market and you're lending long. If that mismatch is there in the NBFC space, and especially RBI is worried about it, isn't that a deterrent for any NBFC which is retail focusing?
Nikunj, you've summed it rightly, but I think RBI has given caution. It doesn't mean that everything has to be rubbed under the wood. They did say that they want uncollateralized loan and they want this co-lending to be a little bit on the back burner. But I think as it exists, the business is doing extremely well. L&T Finance has a relatively good chain of underlying verticals, but the impacted ones, particularly the ones with the fintech, those are the ones which could see a momentary time. However, the underlying is that their order book and their lending is doing extremely well. Their credit dispersions are very strong, and particularly in autos and two-wheelers where they have a market share. So I think the RBI's caution is well, heeded. But look at the global change. Rates are low, inflation is headed lower, and now there is a call for the Fed to cut rates 3 times. So I think the RBI outlook will definitely be a changer over a period of time. And that is why I would say, keep, like I said, keep 160 as a trading profit trading profit loss over which you can keep 50% of your profit but ride it to 200.
Mr. Patnaik, next query, and I must congratulate Mr. Patnaik, 5,000 shares of L&T. Should I sell now? Bhasin Saab, can I preempt your answer? L&T was a good stock, is a good stock, and perhaps in future also will be a good stock.
100%. I am fully with you on that. All I would say is it's close to the buyback price or whatever. Try and convert it into a stock called Siemens. At least book 30% of your profits and convert into Siemens. I think Siemens on this, after the demerger of the energy business and so on, Siemens is looking very, very good to give you another 15% upside. So, you'll have diversified your asset base, though I continue to think L&T is a, must have in all portfolios. But diversification into Siemens will give you both sides of the game. And as we know, Siemens is a debt-free company. It is very, very bullish on India and the road forward on infrastructure. So that would be a little bit of advice which I would go to diversify part of your profits into Siemens.
I may have a slightly different view while, Bhasin Saab, what is saying is completely risk management, but maybe Bhasin Saab wait it out for 6 months before you diversify, because I'm looking at history of elections and history of L&T. 6 months ahead of the election, L&T always does better than the market. So maybe wait it out just closer to election date or before the election date, that's the time you should switch out.
Well, election is not after 6 months, it will be coming within 3 months. March is where you will look for the date. We have to have it by April. So it's your choice, but 25% diversification would do no harm. It will actually broaden your eggs in the nest. That's what I'm trying to say.
Okay, fantastic. Thank you, Mr. Patnaik. Thank you, everyone, for watching the show. That's it on this edition of Tracking Trends with me, Nikunj Dalmia. Stay tuned for the last 1 hour of trade.